Hey traders, checking in on the stock market today. We're going to be looking at what I feel is the most important chart to be watching this week, as well as all of the relationships between the dollar and our assets, which are inversely related, but certainly a very interesting start to the week, and we'll see how it's going to all shape up. Hello, and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. So this chart is the NASDAQ E-mini futures, and I'm using futures charts recently for a number of reasons. Number one, SPY had the dividend distribution, and that adjusts artificially to the levels on the chart. And also we have more volatility taking place in extended hours. And whenever there's a lack of volatility, I get all the information that I need from regular trading hours. When there is more volatility, I need to look at the extended hours trading as well and the futures markets to get a complete grasp of things. So looking at NQ here, I've been watching this chart ever since Friday, and I've been posting it madly since it stood out to me. When we get bear breaks with a lack of follow-through, it means scout for a falling wedge. This is a falling wedge pattern, and I'm more confident in it now because of the end-of-the-day bull move in the tech sector and in some of the major players like Apple and Amazon with their response at the end of the day. And again, holding this line. The low of Friday, when we looked real weak, bounced right off this level. The low of today, when we looked real weak, bounced right off this level. Now I'm anticipating that we're likely going to reject from resistance the next time we test it, and then we're going to look for the break of this tightening falling wedge pattern towards the end of the week to dictate momentum from there. So I'm going to jump around a little bit here and look at some different charts because that's going to be easier in my opinion. So NQ, if this bounce gets follow through, we're going to be watching 11,163 resistance tomorrow and this downtrend resistance line. We're also knowing that a lot of individual tech names are just going to be looking for hourly lower highs. So if QQQ sees bounce follow through tomorrow, we know anything under 280.45 is just a daily lower high. Even Apple, which had a great bounce today, anything under 118.83 is just a lower high. So I would not be surprised to see daily lower highs of tech sector names lining up with the potential of an initial rejection from this downtrend resistance line on the NASDAQ futures. So that's something I'm going to be watching for tomorrow for potential guidance. We're also going to be watching the dollar. We know the dollar has been inversely correlated. The dollar's strength today, a big green candle, and confirmation of the daily trend change by breaking 93.66 led to initial market weakness. The metals dumped and cryptocurrency dumped. Again, it's not surprising that all of our assets are moving in the same direction and inverse to the dollar. It has been that way since COVID started in both directions. What will be interesting is when that correlation changes and when it breaks. But until that happens, we're going to trade what has been shown to us as far as these correlations. If I am a bull on any of those assets that I just listed, what I want to see is a loss of the 4-hour uptrend on the dollar from here. Why? Because that would be a daily trend change and a lack of follow through. That would be our low of the dump, high of the bounce, higher low, defending that support, and then a higher high, which we did break, and then a lack of follow through. A daily trend change with a lack of follow through means zoom out and look for the potential of a bear flag. This is still a possible bear flag. If I look at the size of the drop compared to the size of the bounce, the retracement number is going to be small. I don't even need to look at it, but just for educational purposes, we will look at it. And that retracement is less than the 382, which means a bear flag is still absolutely possible. So I would want to see, if I'm a bull, any of those assets. Overnight tonight, I know the dollar is very likely to set a 4-hour high or low. It has a lot of space to do so. What I want to see tomorrow is a lower high and lower low confirming a 4-hour downtrend as the result of this pullback. Why? Because a daily trend change straight into a loss of the 4-hour uptrend is a red flag for dollar bulls, which is a green flag for metal, crypto, and market bulls. That being said, we have to be patient here. It may take a while to play out. If the bulls break 94, look at this daily resistance of 93.99, 93.91. If the dollar bulls break 94, it'll be very meaningful for me as far as, okay, We're getting follow through. I'm expecting further weakness in all of our assets. If we do not break 94, still looking bullish on those assets. So some nice bounces in Tesla, our high flyers, ZM, PTON, they all had big days today. And we are going to be watching for that 4-hour falling wedge. Again, fully anticipating at least one more rejection and continue tightening ranges from here. S&P 500 futures, daily, bear break confirming the daily downtrend. A lack of follow through at the moment, but just looking for a lower high on this bounce. This is the 4-hour time frame. Anything under 33.38 is a 4-hour lower high. If I'm going to call this a daily confirmed downtrend with a lack of follow through, I'm going to need to see the bulls gain the 4-hour uptrend. It's the exact opposite of what I just said for the dollar. We have to see the 4-hour uptrend gained for the bear break to see zero follow through and for the bulls to gain confidence on this weekly chart. A daily confirmed downtrend with no follow through. While I won't call this a weekly bull flag because the pullback has been fairly significant, it's still an uptrend. And we are just looking for a weekly higher low. And that will be the weekly higher low being set if that NQ 4-hour falling wedge breaks bullish, in my opinion. So it's not game over for the bulls. I'm not all out bull here. I'm looking bullish with tight stop losses. And if the dollar breaks 94, I will say I was wrong to be looking bullish. IWM, bear break of 147.68. Not a ton of follow through right now, but again, still in an hourly downtrend, just looking for an hourly lower high to be set on this bounce. We would have to confirm an hourly trend change back to the bulls. Even then, we're just looking for a daily lower high. So again, tempering those expectations for bulls, knowing the daily lower highs are the most likely scenario on a bunch of individual names, including our major names like Apple and Amazon and names that had a solid end of the day into the close. Healthcare sector was a big bear today. They stood out as the weakest sector on my screen for the majority of the day. They did have a nice bounce into the end of the day, but they sure took their sweet time to get it going. Both XLF and XLV and SPY were hourly bear flags all morning into the midday. We went down to confirm the hourly bear flags, and the bulls stepped in and played defense and rejected those bear flags from following through. So XLV, I still consider this an hourly downtrend. I do still need more follow through, but even then, we're just looking for a daily lower high compared to 106.22. What every individual bull that is expecting a daily lower high is looking for is a big enough bounce to then expect a daily higher low. So if I'm looking at Apple, great big green day, absolutely. I just want to see enough of a bounce to look for a daily higher low and set up the potential trend change, knowing that we are in a weekly uptrend still, just like those S&P 500 futures charts. XLF, and don't get me started on the leaked documents with XLF, but pretty much just scammy, shady banks continuing to do scammy, shady things and launder money for sketchy people. And the analogy I gave this morning first thing was you got a teenager in high school, they're starting to get into drugs, they rob the convenience store down the street, and you deal with that by upping their allowance to allow for them to pay off what they robbed and their legal fees, and then you think, oh, the problem's fixed now. And that's 2008, and here we are in 2020, and the banks are still doing their same shady stuff. Trillions of dollars. Anyways, that led to a lot of XLF weakness first thing this morning. The bounce at the end of the day. We need to see an hourly trend change back to the bulls to have confidence in that bounce followed through, keeping in mind that we're just looking for a daily lower high to be the result of that bounce. Big banks suck. XBI. Daily consolidation underway. Higher low every day the past bunch of days, finally rolling over today. And in my opinion, the healthcare weakness had a lot to do with that as well. But XBI bulls looking for a daily higher low compared to 103.20 with tons of space to do so. They have been the strongest sector over the last couple weeks. And we're going to be watching to see, can they keep this daily consolidation healthy at this point? Just looking for an hourly lower high on our next bounce attempt. If we can change the hourly trend back to the bulls, that will keep this daily consolidation healthy. As of right now, it is a possible hourly bear flag. We definitely need more bounce follow through than what we saw at the end of the day. It is first hourly oversold conditions coming off of a significant daily bull move. Semiconductors holding the low of 163.57. Bulls certainly buying the gap down open. And from here, the most important levels for me as things get a little choppy, 163.57 support and 174.78 resistance. Those are the only two levels that I personally care about. We are currently just about $5 above support and just about $6.50 below resistance, close to the middle of that range. But as long as we are within this range, things can get a bit choppy in the short term. The VIX had a big spike this morning, but giving it back as the market bulls bounced. We know longer term, bigger picture, we are expecting a weekly lower high compared to 38.30 as the most likely scenario on this move. Has that weekly lower high been set? Maybe, but we do have a daily higher low here. 24.80 was the low, higher low of 25.30. And if we can hold 25.30, technically those little daily higher lows remain intact. Obviously, the bulls don't have a whole bunch of confidence in the volatility sector the last 3 days as the bears have controlled from the open. They didn't control from the open today, but they controlled it into the close, I should say. So here's the dollar, daily trend change, lack of follow through at the moment. Again, we could see follow through over 94 over the next 2 days. And at that point in time, my perspective is going to completely shift as far as looking bullish on NQ's falling wedge and looking for potential bullish entries on Apple's weekly higher low and things along those lines. So it's all about the dollar for me in the short term. DXY daily time frame, NQ 4-hour falling wedge. If I had to choose 2 charts and only 2 charts, that's what it would be for this week. Gold, clear bear break. I did stop out of a swing position that I entered on this consolidation. Kept that loss fairly small. Kept that stop fairly tight, exiting when 1900 broke here. On the current bounce, we are just going to be looking for a 4-hour lower high to be set. And again, if we want to see a bullish shift on a lack of bear follow through, it needs a 4-hour trend change. Just like S&P 500 futures need a 4-hour trend change, just like the dollar bears need a 4-hour trend change. And if we get it, that's going to keep this weekly chart looking mighty fine for the gold bulls. Yes, it was a bear break, absolutely. And I'm fine being all cash right now and saying, okay, stopped out, small loss, being protective. Let's see how it shapes up from here. Because if we change the 4-hour trend back to the bulls, we're going to be shaping up to hold this weekly 12-period exponential support, which has been holding for many months. And while it has been a short-term bear break, overall, it will keep things fairly bullish if we regain the 4-hour trend from here and if the dollar cannot break 94. Silver, a bit more convincing of a pullback. We held the 23.44 low. Same thing, looking for a 4-hour lower high. Trend has to change back to the bulls on this bounce attempt if we are going to say that it is a daily or weekly bear break and a lack of follow through. And still trying to hold weekly 12-period exponential support for silver as well. And a clue is that the bull miners have not broken support. 39.29 held today. 39.37, we held it by 8 pennies. We're going to look for a daily lower high next bounce, but the bulls would love to remain sideways on these miners, which again keeps the narrative alive of a potential fake out. This would be a fake out. If gold breaks bearish, then changes the 4-hour trend bullish and heads back to the mid-1900s, I would call that a bear fake out. So I will happily jump back into gold at a higher price than where I was stopped out if I see the setup align. And that's one thing that newer traders really struggle to do, is jumping back in on trades with a worse entry than where you stopped out. And I will do it often if the setup dictates it. And again, it's just having confidence that, you know, even if you're jumping back in on a trade that you were just wrong about, as long as you keep that risk small, that's fine. You can have more clarity. It's essentially, you know, if I get stopped out at 1900 and then I re-enter bullish at 1930, I just paid $30 for more clarity and more confidence, which I'm fine doing. We need to be watching oil for a lower high. We're switching over to CLX 2020 futures contract for November as the volume has rolled over to that month and our daily lower high is set. So how do we know to look for a daily lower high? Because when you see this kind of volatility, both on the drop and on the bounce, you know to be looking for an equilibrium as the most likely scenario on whatever time frame it happens. So here's the daily lower high set at 41.72, and we're now looking for a daily higher low compared to 36.58, and we need a 4-hour trend change back to the bulls for that daily higher low to be set, knowing that on the current bounce we're just watching for a 4-hour lower high. What's the similarity here? Oil, gold, Bitcoin, S&P 500 futures, all looking for hourly or 4-hour lower highs on this current bounce attempt. And trend changes are needed for all of them for us to see a shift back to the bulls from here. If we don't change 4-hour trends, it's just a lower high and potential continuation of the downtrend. Natural gas bears following through significantly today, yet again. Closing in on daily oversold conditions. Still looking for a weekly high or low compared to 1574, absolutely. But just the opposite of oil, as far as direction, we are looking for an equilibrium due to the amount of range here and the amount of volatility. So it is worth scouting for a weekly high or low. An aggressive bull is going to be scaling into this weakness. A patient bull is going to be waiting for a big enough bounce on the daily to then try for a higher low and have a stop level to be playing off of, hoping for the daily trend change for the weekly higher low to be set. I'm all jacked up on a nice day of clarity with all these moving pieces lining up into how things could play out, and curious to see how things shape up for tomorrow. If we were to see this bounce continue all overnight tonight and a gap up open in some of our tech sector names, I will be watching bearish short term tomorrow for a rejection from this resistance. If we top out tonight and pull back and look for a 4-hour high or low straight into the open tomorrow, I'll be looking to play bullish off of the low of today. So it all depends on what the overnight session gives us as far as what direction I'm going to be looking for as a day trader tomorrow. And I'm excited to see what shapes up. Hope you had a good day. Like, subscribe, comment, please. It helps our algos and all that good stuff. And I enjoy interacting with you all in the comments. Have a good rest of your day. We'll see you tomorrow. We'll end it here with a hike. Very quick, short little video. A hike from over the weekend. Just wanted to go 2 or 3 miles. It ended up 6 miles and felt like an 85-year-old at the end of that hike with my groin and legs. And that's a big wake-up call to do more hiking. So we'll try and get some weekend hike videos over the next couple months.